All right, guys, today I am doing an interview with Chris Raia of SunCoast Credit Union. I got a few questions for him about mortgage and the real estate business in general, and we'll see what happens. Thank you, Chris, for joining us. Great. We're gonna have a seat and get this interview started. All right, Chris, so to start, I kind of want to, get to know you a little bit better.
Sure.
Can you tell me kind of your background, where you're from, and whatnot?
Well, I'm originally from New York. I think we're both originally New Yorkers. Grew up in a town about an hour north of New York City. I've been in Florida since the year 2000. Sold new homes here in the Tampa area for 15 years. And I've been on the lending side for 4 going on 5 years now, most of it with SunCoast Credit Union.
Oh, great. Yeah, so I think when we first met, you were in new home sales, actually. I can't remember exactly what community it was.
I think it was Lennar and Live Oak.
Yeah, maybe.
Or maybe Heritage
I think
Isles.
it was.
Yeah.
Actually, yeah. So tell me a little bit about, your experience at SunCoast and kind of like what differentiates SunCoast from your typical loan officer.
Sure. Some of the big difference is, two of them. One, it's a credit union, and it's a not-for-profit credit union. What that means is that any profits that the credit union makes go back to the customers in the forms of lower rates and lower fees on their programs. When your lending institution gets large enough, they'll allow you to create your own loans, and you keep them in your portfolio, hence the term portfolio loans. So as long as your lending institution is large enough and can bear the risks of, heaven forbid, those loans going bad, they allow you to do that. So that's what we have. We have a number of different portfolio loans, which means your loans are never sold. You'll hear some people say, I closed on my loan, and within a month they sold my loan to another company. Well, that won't happen at SunCoast with our portfolio loans.
So everything stays in-house.
Correct.
And if you don't know this already, most loan officers or lenders, they work with like wholesale lenders that are going to package those loans up and then sell them off to other institutions.
Correct.
Right, much larger institutions.
Absolutely.
Instead of doing that, you guys keep them in-house and are in control. Does that limit you in any way as far as how much can be lent out at any given time, or how does that work?
Yes and no. That's a great point, because it limits what I can do at the moment to just the portfolio loans. So for instance, I can't do government loans like FHA, VA, USDA. We're going to start, I believe, to get our first investor loans this year too, because we don't do them at the moment, but that's coming up fairly soon as well. So we just deal with what's in our portfolio. So my scope might be a little bit more narrow than some of these folks that work at larger mortgage banks or brokers, but the programs that I have are really great niche programs with low fees and low rates. So
okay, yeah. So there's obviously good things about that. The fact that you don't have VA or FHA, that's some consumers it's not going to work out for, but they may not know that they could possibly qualify for a conventional loan with you at what's like the lowest?
Well, one of our portfolio loans, I've got one that I would compete it with FHA. My first-time buyer loan, where it's either a first-time buyer, somebody who hasn't owned in 3 years, or anybody being displaced by divorce, and that's 3% down. There's no PMI at all. There's none up front.
Okay.
There's none monthly. The origination fee is only $500. We pay up to $3,000 toward their closing costs. The rate today was 6.125% on that loan. So it's hard to beat. So there's less down than FHA. There's no upfront MI like on an FHA loan, which is thousands of dollars. And then there's no monthly, which could be hundreds of dollars.
Yeah, that's a
savings payment.
That's even better than FHA. So
that's exactly right.
Yeah, we need to get more people involved on that. Because if you're not familiar with a typical FHA, you're putting 3.5% down. You're paying a monthly insurance, right?
Yep. Private mortgage insurance.
Private mortgage, PMI.
And you're paying up front too. You're paying, forgive me, I forget the exact. You're paying roughly 2.5% of the loan amount, roughly, in upfront PMI on an FHA loan. Whereas and that goes into your closing costs, and you don't have that with us.
Right. Yeah, that's good. All right. So getting into what you just said, 6.125 is what you said.
Correct.
All right. So we're, I know we don't have a crystal ball, but like, where do you see rates going here in the near and long term?
A lot of the pundits are talking about, and they have been talking about really for the past year, rates coming down, rates coming down. Our rates over the past, I guess, week to 10 days have come down about 0.5%. Personally, I think in the next 3 or 4 months, we'll more than likely see rates start to come down a little bit for political reasons. I think if there's a new administration in office, I think the rates will come down more. The pundits all talk about rates settling somewhere in the 5s when they eventually do settle. So I think and hope that they would be there to get some of those people who are hesitant about listing their homes now because they're in a home at 3 and 4% interest. And why do I want to get in at, with conventional rates being 7, sometimes 8%? Why would I leave and pay almost twice as much?
Right. And, I think on the real estate side, we're seeing a lot of that.
Yep.
And it is putting a strain on the supply, right?
Correct.
We still have a ton of demand. And with less people putting their homes up for sale because of, like you said, it seems like, I can't remember the numbers, but I think I read it was like close to 70% of homeowners with a mortgage rate now are below 5%.
Right. Absolutely.
Yeah. So I mean, that's a valid point. But getting into, you have some special programs that you don't necessarily have to pay 6.125%. You have like a 7-year ARM and another one that you had mentioned earlier to me off camera. Can you explain those to us now?
Absolutely. Our ARM programs are unlike others. When I was on the mortgage banking side for about a year, we see a lot of people when they're writing ARM mortgages or ARM loans, they realize that rates are high on those loans at the moment, and the first thing that people are going to do, because when they get an ARM loan, they're hedging their bets that, hey, I'm going to get an ARM loan, I'm going to have a lower interest rate than the 30-year conventional loan, and then when rates come down, I'm just going to refinance. The banks are smart to that. They know that when people write an ARM loan mortgage, that they're going to refi. So what they're doing in many circumstances is that they're charging points up front to make their money up front, so when they refi, at least they've made some money. So when I was quoting people 2-3 points up front on an ARM loan in order to do it. At the credit union, there's no points on my ARMs. So I've got a 3-3 ARM that yesterday I believe was 5.625%. And what a 3 and a 3 means, it means it's the rate and the payment are fixed for 3 years, and then they can adjust for every 3 years after. So if you're one of these folks that's hedging their bets that in the next 12 months or so that rates are going to come down below where they are now, you can get into an ARM and then just refi into a 30-year product when rates come back down into the 5s.
Right.
And then you're not hurt, but you're in a more affordable product. And on the 3-3 ARM, we're paying up to $3,000 toward closing costs too.
Okay.
No points up front. And then I've got a 7-1 ARM where the rate and payment are fixed for 7 years and then can adjust every year after that. But that rate was in the low 7s, high 6s yesterday with no points.
Okay, even still they're that high. All right. So are there any other unique products that you offer that we typically don't see at other lenders?
Yes. I've also got our own internal hero program. And what that loan is for, it's for first responders, nurses, anybody that works for a school or university, so not just teachers. So it could be a bus driver, it could be an administrator, as long as they're paid by Pasco County School District, even a private school, as long as their pay stub says such and such school, I can get them that loan. And for nurses, and we can use it for doctors as well. It's 5% down, no PMI, no origination fee, and no intangible tax.
Now you mentioned Pasco. Is that exclusive for Pasco County?
No, it's for anybody. So I just use Pasco as an example.
Okay.
So it could be Hillsborough, Pasco, Pinellas. We can basically write business for anybody in the state, and as long as they're in any county that the credit union, where people live, work, or worship in any area close by the credit union. And I believe it was more than 39 counties in the state. So the vast majority of the state.
Yeah, very good. So okay, now I'll bring up the hot topic. Here we are. We're at West Bay Homes here in Murata.
Gorgeous model.
Yeah, beautiful home and everything. And you know, when it comes to new construction, right? A lot of the builders, they have their preferred lenders, and using their preferred lenders, they offer all these incentives and stuff like that. How do you compete, or what can you offer maybe that the builders can't, or potentially like people that may not qualify for a builder's loan program?
Right.
What options do you have in that scenario?
Well, the portfolio loans that I just spoke about, I'll give you, for example, I had one of the folks from one of the other large builders called me up and said, hey, I've got a guy, $460,000 purchase price, wants to go FHA. I'm concerned he doesn't have the money. We pulled up the good faith estimate. Right off the bat, the upfront mortgage insurance was $8,000. I wiped that away. Wow. The monthly PMI was $215 a month. I wiped that away. The intangible tax, 0.002% on the purchase price, was $920. I wiped that away. My rate was a full percent lower than what they were charging on FHA. That was $300 a month. So at the end, it was $10,000 and $600 a month in payment. And that's on my first-time buyer program. The max loan amount on that is $450,000. So to keep it at 3%, you're looking at a rough purchase price of around $465, $467. But again, you could still go 5%, 10% down with that program, and I have people that do that.
Is that the max, like 10% on that program?
No, you can go higher. You can use as much as you can do as much as you'd like, but you can do as little as 3% down. Okay. Which is still 0.5% less than FHA. So on $400,000, I mean, that's $2,000 less that you have to come up with.
Okay. And also, I mean, I know you saved them a lot of money, but is there any builders that will still honor the incentives if they're using you?
There are some. Like I said, I sold new homes for 15 years, and one of kind of the unsaid rules, and I don't know if it still holds true today, was that if that builder's lender doesn't have the program, that they would allow you to do your loan, or the loan that the customer had, and still honor all or some of the closing costs. And I understand a lot of the builders have relationships with these lenders where the lenders pay part of the closing cost contribution, and I get that. But my closing costs are also going to be significantly less on this loan because, like I said, our fees and the fees are going to be a lot lower because it's a credit union. So I'm not going to charge nearly as much.
Right. My favorite words were, we wiped that away and then we wiped this away. And in the end, we got to, save the guy $600 a month, right? And
yes. $10,000 up front on a $460,000 purchase price. The other big thing for builders is that I can do a 6-month rate lock for free with a one-time float down. So a lot of these builders right now will qualify somebody, especially in the turmoil with interest rates. They'll qualify people now, but they can't lock anybody till 30 to 45, maybe 60 days before closing. But by that time, if rates have gone up, a good portion of their pipeline might not qualify anymore if some of them were on a razor's edge. I can eliminate that by locking people in at 6 months ahead of time, and still, if the rate goes down, I can float them down one time for free, and that's more or less unheard of.
Wow, that's great.
And I can do that up to with roughly a 600 credit score on the first-time buyer loan.
Okay. I think I have one question left, right? Sure. And this is, so to anybody that's on the fence or considering making a purchase that are just kind of hesitant to pull the trigger, maybe they want to wait or they think it might be better to wait, what would you say to those individuals now?
Great question. I actually, and I think you were there when we had Bob Enriquez come to our pitch group, and Bob was still talking about anywhere from 5 to 8% appreciation next year. And on my Facebook page, if you haven't seen it, I did this breakdown where I did the principal and interest on a $400,000 purchase price at 5% down at 7% if the rate went down to 6% and if the rate went down to 5%. Now, roughly at 5%, the max people were saving was $400 to $500 a month. On a $400,000 home, even on the low point, if you experience a 5% equity gain on $400,000, that's $20,000. If you save $500 a month, that's $6,000 you've saved, but you've given up $20,000 in equity. So your net loss is $14,000. Now, you and I both know that if rates come back down to 5, a lot of these fence sitters are going to jump into the market. And what happens when people jump into the market? They
Prices
create a higher demand,
go up,
and prices go up. So not only will you miss that equity gain, but you will more than likely pay more for that house later once everybody else jumps in.
Right. Yeah, I mean, you bring up a great point, and when you really look at the numbers, it does support that saying where we say, you know, marry the house and date the rate, right? Because...
And especially when your lender, instead of charging you a full refi, will only charge you 0.5% of the loan amount to float the rate down to whatever the current market is.
Right.
We will do that.
You'll do that.
So I'm not going to charge you a full refi, which is 1.5–2% of your loan amount after taxes, fees, escrows again. It's 0.5%. So on $300,000, we charge you $1,500. We float the rate down to whatever the market is. Done.
Great.
The other big thing I've got, which we didn't mention, is I have no condo overlays on these portfolio loans.
Oh.
So which means we don't ask for a condo questionnaire. So I've had other lenders reach out and say, hey, I've got somebody with the condo questionnaire, I've got somebody that owns a large percentage of the building, so we're out. I said, I'm not. So they send it to me and we can get them done.
Yeah, that's excellent. Yeah,
Up
especially
to $2 million
like right
in
now.
portfolio loans, yeah.
Yeah, in Florida with the condo situation, and
yes,
I mean, I recently had a issue with that very thing, and we went through 2 lenders before we got to a third lender that could actually do the loan.
Right.
And I think it did come down to like the questionnaires and all this, you know, new internal regulations that they have within these banks.
Right.
Doing them. So what's next for Chris Raia? I mean, I know you're like a connector kind of lender. Everywhere I go to a lot of networking events. I run into Chris all the time there, and he himself hosts a lot of events and
yes,
brings people together. So that's awesome. You know, I think that it sets you apart from a lot of other lenders that you know are not doing that kind of thing. So what's next for you?
Just grow my book of business and keep doing what I'm doing and meeting great folks like yourself, and just partnering with people and helping them build their dreams and enhance their lives. And that's about it, my friend.
That's awesome. Well, I'd love for you to tell everybody how they can reach you, where they can follow you on social, and yeah, let them know.
My name's Chris Raia. Last name is Raia. My cell phone number is 813-220-8382. My email is chris, chris.raia at SunCoastCreditUnion.com. And even if somebody wants to call me with a what if, run payments for them, I'm happy to do that.
Awesome. Well, thank you, Chris. I appreciate
Rob, it was a pleasure.
That. And yeah, reach out to Chris and reach out to Rob, and we'll get you situated just right in your new home.
Thank you very much.
Bye.